on Thursday, August the 20th. And today we've invited Angela Hollins. She's a certified public accountant to speak with us about some things that are very near and dear to our heart. And I'm sure you can imagine that word is money. So let me tell you a little bit about Angela before we get started. She's been a CPA for over 15 years. She's owned her own CPA firm in Northern Virginia for 12 of those years. Throughout her career, real estate agents have hired her to help them with managing their finances, make sense of their options, and also maximize tax savings. So not just, well, just for a quick side note, for those of you, you may wonder what's the difference between a bookkeeper and a CPA, kind of like the difference between a lender and a broker. Angela likes to say it like this: it's what versus why. A really good bookkeeper knows what to do with the books, but a CPA knows actually why. And as you can imagine, this is an important distinction when you're making long-term business decisions, when you're educating a partner or an investor on your financials, or if you have one of those, and I'm sure a number of you have, those friendly disagreements with the IRS. So that's why.
Hello, friends.
Pardon?
Sheila, I think it's Lauren. It's got some background. So
Sorry, I'll turn it off. Sorry.
So, you know, as we've said many times, as a real estate agent, you're actually running your own business. And that's another great reason to have Angela with us today, because she is a small business owner herself, which gives her this unique and personal insight into the challenges and advantages of running your own business. So today, Angela is going to talk about tracking and managing your financials. She's going to talk about business structure options, tax planning, special rules for real estate professionals, and a few tools to help keep all of this straight. If you have any business today, if you have, I'm trying to get my thoughts together here. If you're new to the business, and even if you are a little seasoned, today's trainings is going to be great for you, and it's be especially helpful. And even if seasoned and a veteran, as I mentioned, it's a great refresher and a chance for you to ask the question or two. So as Angela and I talked yesterday, and she's not going to be able to read the chat and kind of go over the material that she wants to go over. She wants to stay focused on that. So I'm going to have the chat open on my side. If you have questions as we go, please put the questions in the chat. And when Angela opens it up for Q&A, then I can read those questions and we can have some good dialogue going back and forth. I think we're all going to learn something. So without further ado, I'm actually going to turn the host over to Angela.
All right.
Let me turn you as host and welcome.
Where is it? Okay, admin is now host.
Uh-huh.
All right, can everyone hear me?
Yes.
Yes?
Yes.
Okay, perfect. All right. Thank you, Sheila, for having me here today. And thank you to everyone on the call. I think we're going to have a good time learning a few tips on taxes and finances. I'd like to start by telling a quick story. A client came to me a while back. They'd received a letter from the IRS. This wasn't a birthday card or a love letter. It was one of those letters. Turns out, they had not filed their personal tax returns for over 8 years. This doesn't make them a bad person. Sometimes people will miss a year because they don't know their options and don't know what to do. Then they get nervous and don't file the next year. And this can go on and on and on. Well, this client of mine now owes over $400,000, and that's not even including interest and penalties. These could be as much as $50,000 to $100,000. The IRS in the state of Virginia will hit you with every little penalty under the sun. Failure to file by the due date penalty, failure to pay taxes penalty, failure to pay estimates penalties, and for every single year missed. And there's more. These are just some of their favorites. Now, if this client had hired me 8 years ago, they would not be in this situation. My fees would have cost them way less than their current interest and penalties. This is important stuff with crazy, painful consequences for screwing it up. Things like the state taking money from your bank account without even asking. Look, I'm not trying to scare you. I just want to share some facts, and I'll know you all will do the right thing. Today, I'm here to cover 5 key areas with you. The big picture of your income and expenses, including the question I get most often, what can I write off? Business structure options, everyone's favorite, taxes, a few of the many, many tools available to you, and last but not least, special rules and benefits for real estate professionals with rental properties. So just real quick before we dive in, please message all questions to Sheila and we'll review them at the end. Okay, let's get into it. First, let's talk about the big picture. Remember those goofy PSAs? It's 10 p.m. Do you know where your children are? Well, something only slightly less near and dear than your family. It's 9 a.m. Do you know where your money is? Let's start by taking a look at your income. My mama always said, don't spend it all in one place. My biggest piece of advice here might seem obvious and simple, but I can't tell you how many people ignore it. Set up a rainy day fund or emergency savings. How much? Well, back in the olden days before COVID, the rule of thumb was about 3 months of living and working expenses. But how long has COVID been going on? You may want to make it 6 months. COVID might not have hit real estate as bad as it hit other industries, but what about the next big thing? And believe me, there will be a next big thing. The key point is start now. It's never too late to start saving your money. Let's think back to 1998 through about 2006. It was a good time to be a realtor. Did that continue forever? No. But some people acted like the good times would just keep on rolling. And when the hard times hit, they were left stranded. So it's crucial to set aside some money to weather the cycles. Every time a crisis hits, the news people love to pretend that bad times have never happened before. Is anyone else on the call getting tired of hearing the word unprecedented? Well, anyway, we might not be able to predict when you'll need the money you saved up, but I can definitely predict that you'll need it at some point. Okay, now let's talk expenses. We'll get into deductions later on, but just in general, real quickly, how much are you spending each week or month? Do you know? Some common expenses can include cell phones, marketing, insurance, fees, dues. And here are some hidden expenses that can add up quickly, like gas, dry cleaning, laundry, car maintenance and repairs, eating out, and oh, how about those masks and hand sanitizer? Clearly, all these can add up quickly. Again, we'll dig in a little deeper later, but suffice it to say, do your best to track it all. Now we're going to cover business structure options. First, we'll see what they're called. Then we'll cover a few pros and cons. For most people, there are 5 basic options you'll be looking at. Sole proprietorship. This is where it's just you and nothing extra or fancy. Limited liability companies or LLCs, S corporations, C corporation, or partnerships. A quick aside here, you won't be tested on this, but just in case you're wondering, don't get thrown by the terms S Corp and C Corp. They're just named that way because they have to follow the rules under certain subchapters of the IRS code. Can you guess which subchapters those are? Yep, you guessed it, subchapters S and subchapter C. And it has nothing to do with the tax forms. For example, sole proprietorships file Schedule C. C corporations file Form 1120, and S corporations file 1120S. Clear as mud? Yeah, okay, let's move on. Here we can see the very high-level pros and cons of each option. For sole proprietors, a pro is that it's the easiest option. A con is that it offers virtually no protection. For LLCs, a pro is that it does offer some protection, and a con is that it introduces a little bit of complexity. For S corporations, a pro would be that it offers even more protection, while a con is that it's, well, a little bit more complex. And for a C Corp, the biggest advantage is that it offers the most protection, but it can be more complicated. And if you aren't careful, the government can sort of double dip on taxes. And for partnerships, those can offer a lot of flexibility, and nothing against anyone here who is married, I am too, but a partnership is a lot like getting married. You better know who you're getting into bed with. That's a lot to cover, so I'm going to pause for about 10 seconds in case any of you need to finish up messaging a question to Sheila.
You're good for right now, Angela.
Perfect. All right, I'm moving on. And now, everyone's favorite, taxes. Here in this section, we're going to talk about some things you need to know for tax planning. Some people treat tax planning like an end-of-year activity, but you really ought to keep it in mind year-round. You don't want to get to the end of the year, learn about something you should have expensed, and then not have time to do anything about it. This is even more important as you grow. Many CPAs offer monthly and quarterly tax planning packages. So with that in mind, first, let's look at some major deadlines. What's the biggest deadline of all? Tax day. For individuals, that's April 15th for federal tax returns. So all agents are affected by this deadline. Plus, for certain business structures, there's a March 15th deadline. Also, for all business structure options, there's quarterly estimate deadlines. That's April 15th, June 15th, September 15th, and January 15th of the following year. But the way they're handled can be different depending on your business structure. Additionally, if you have staff or assistants, you may also owe payroll tax at certain intervals, usually every time you make payroll. Let's go back real quickly. Remember our friend at the beginning of our talk? The client who fell 8 years behind? With all the different kinds of deadlines and with a lot of different rules, you can see how things can get out of control and fast if you don't stay on top of those deadlines. You gotta stay organized and track everything. So now for the question I get all the time, what can I write off? Anything and everything related to performing your work and getting new business. How much? Here are some examples. For work-related meals, you can write off up to 50% of those, whether it's by yourself or you're treating a prospect, client, or colleague. And here are some examples of 100% write-offs. Office expenses like paper, postage, pens, cell phone, sanitizer. Marketing expenses like branded shirts, signs, business cards, realtor dues and desk fees, education and training, business insurance like E&O. For auto expenses, you have two choices, mileage or actual expenses. For mileage, the standard mileage rate for 2020 is 57.5 cents per mile for business miles. Or you can track actual expenses, but they're prorated based on business miles versus personal miles. So you still have to track mileage. So for that reason, most of my clients just do the straight mileage method because it's easier and it usually helps them a little more. You have retirement plan options. We could spend hours on this topic alone. Just know there are some pretty nice deductions depending on your type of plan. Here's a bonus expense tip. For certain business types, you can pay your dependent child up to about $12,000 a year. They don't have any withholding, you don't have to pay payroll tax, and you can still claim them as a dependent. It's a win-win-win all around. So what's not allowed? Just personal expenses like dry cleaning and non-business meals, plus entertainment like ball games, nightclubs, concerts, even if it's for clients or with clients. This is no longer allowed under the new tax law. So here's a good rule of thumb. First, try not to get too clever. And second, hire an expert to help navigate the options you may not be aware of. So for that point, get help. So let's take a quick audience poll. Does the government make things simpler or more complicated? Yep, of course, they make it more complicated. It's never a bad idea to ask an expert. After all, that's why people ask you to help them buy and sell homes. You're the experts. Find an expert in tax and accounting. They can help make sure you keep more of what you earn while staying out of trouble. And I don't know about you, but I don't look good in an orange jumpsuit. Let's change gears real quickly and look at a few tools. There are a ton of tools out there, but here are a couple of the most popular ones. Popular is good in this case because it means there are probably a lot more people who can help you if you get stuck. First, we see Microsoft Excel. It's really good for starting out. It offers some great templates. And in case you get stuck, you can ask other agents because they probably have templates as well. Next, we have ones like Xero, FreshBooks, QuickBooks Online. Lots of people like these tools and say they have a great user experience. They're easy to learn. There's lots of information online, think YouTube. They connect with most banks, and they connect with other cloud apps like CRM apps and expense apps. And here we have Everlance. I personally use this one for mileage tracking, and I really like it. But Everlance really is an all-in-one tool. It tracks revenue and expenses, has some cool tax features, and has an easy-to-use automatic mileage tracker. Plus, you guys get a 10% discount through Coldwell Banker. So now I'm a little jealous about that. All right, the last thing I want to touch on is actually pretty cool for real estate professionals. You get special tax benefits for owning rental properties. You can write off all passive activity losses. The IRS says owning a rental property is a passive activity, even though I doubt it feels like a passive activity. This is pretty amazing because owners who aren't real estate professionals have some pretty ridiculous restrictions on rental property losses. So what's it mean to be a real estate professional? The IRS definition is twofold, and you have to meet both criteria. You have to work at least half-time in the real estate industry, and that has to equal at least 750 hours per year in the real estate field. So at least half-time and at least 750 hours. This can be a great way to invest your money, but get advice. This will help you make smart decisions. There's no downside to getting advice. We're about ready for questions, so let's quickly recap what we've covered. Keeping track of your income and expenses so you can understand the big picture, the various business structure options, your federal income taxes, a few tools you can use, and of course, the benefits for real estate professionals who own rental property.
Angela,
Yes.
can I break in just for a second? I've been hesitant to break in because I don't like to interrupt, but we're not seeing your screen.
Oh, so you haven't seen it the whole time?
Yeah, we can see your beautiful face.
Oh,
But if you don't mind, and if there's a
Yeah.
way afterwards, I don't know if
I can share the slides. Oh yeah, I
That
wish
would
you'd
be
broken in
awesome.
before. Hold on, I gotta figure
Yeah, I
out
hated to
why you.
interrupt. I'm sorry.
Oh,
Share screen down there at the bottom, I believe.
yeah.
Yes.
Yeah, it says you've disabled participant share screen sharing. Is that me? Yeah. It says host disabled participant screen sharing.
Okay.
Yeah, that stinks. We had great slides.
Sheila, you probably have not gave her permission to share a screen. That's what I think you have going. So
Okay.
Yeah, still says disabled.
so while she's getting that stuff together, Angela, I have a few questions for you, and I'm not leading. I apologize up front if it sounds like I am. What is probably the best structure for an agent? Is
For
it
an
a sole
agent?
proprietor or an LLC or?
I would say an LLC and still filing a Schedule C on their tax return. That's probably the most flexible
Gotcha.
because at least the LLC would offer a little bit of protection.
Yep.
Yep. And just if you're looking for the easiest,
I can't make, it says admin as a host. Huh?
So one other question for you, Angela, on stuff with this. So I have several agents over the past year that's either bought investment properties or primary residence or sold primary residence. Anything special with that part that they can do for their taxes?
can you repeat that?
So I've had several of my team buy and sell houses for their
Yes.
personal residence or even investment properties over the last year. And I'm just curious what kind of benefits they can get from doing that or what kind of
Okay.
pitfalls they need to watch out for.
Nope. If it's investments, then again, you have to deal with the passive activity loss rules. And being a real estate professional, you can actually go have some fun with that and write off quite a bit. You wouldn't be stuck with the $3,000 a year loss restrictions like the rest of us. So, and not saying that you'd always have losses. You can, plan them against each other, whether one year you have a gain, so you want to sell another property you know you're going to have a loss on, and you can net them together. But it does open up some options for you to be when you're a real estate professional.
Thank you. Hey, Melinda, why don't you open up and ask your question? I'll let you do that.
Sorry. My question is, the more write-offs that I have, the less adjustable income I have on my tax return. So when I'm applying for a loan, it doesn't show
Yes.
much income.
Right.
Your advice?
Yes, that is true. So regarding that, you will want to show more of that income if you are trying to apply for a loan. Absolutely.
I'm assuming it's a balancing act, right, of the right amount of
Correct.
income to get whatever loan you need and the right amount
Yes.
of write-offs to not pay more taxes than necessary.
Correct. I mean, when you're making money, you are going to pay taxes. There's just no way around that. But yes, there is a balance.
And where's that fine line between the standard deductions and writing off mileage and all that stuff?
Okay, writing off mileage. You mean the standard deduction versus itemizing?
Well, just pretty much all all of your real estate write-offs. I mean, you've got your standard deduction, but
Yep.
then
Okay, so I mean the fine line. If you have expenses, you can write them off. Now, when it comes to mileage, you can't write off commuting miles, so be careful about that. Like if you start using Everlance, if you are driving from your home to the Coldwell Banker office in Winchester, that's not deductible. It's only deductible when you leave Coldwell Banker, and meet a client at a house that you're showing, then that's deductible. A way that I've always done it is I stop off at the UPS store, pick up my mail, and then which is right by my house, and I start my mileage there, and then I drive to work, and that's deductible. Again, just keep track of that. The tools that I mentioned are pretty easy, make it much easier than it used to be. But yeah, I mean, if you have legitimate expenses, you can take them. absolutely. I would suggest taking them. If you're not worried about applying for a loan, then take them.
Angela, I'm going to help and try to read some of the questions here while they're trying to get you working.
Sure.
So I have a question here that says, when an agent meets with a client and purchases lunch, etc., how much is taxable?
When an agent meets with a client and has lunch, they still can only write off 50%. If it costs $100 for lunch, you can only write off half of that, so $50.
Okay.
There we go. Okay.
I'm reading the question.
And I can always, if we can't get this fixed, I will send all of these slides to you all as well. Sheila, can you help?
Angela,
Yes.
I can actually, Stephen made me host again. And when I turn it back over to you for host, when you click the share screen at the bottom.
Yep.
Like we did get, it should work. I don't know why it was not working for you. So
Yeah,
I'm going to turn you over as host again.
Okay.
And once I turn you over as host, you should have all the features at the bottom.
Okay, and I'm going to read off a couple more questions for you, Angela, while they're looking on that. So I have a question from Paula, and the question is, my question relates to have a business inside of a business, such as I'm a broker, so I own my own brokerage, and can be paid through that instead of through her personal name, is what she's saying. So, Paula, I'm not sure what your question is. So, hey, look at that. We can see a great screen. Awesome. So, Paula, why don't you unmute yourself, clarify the question. I think I know where you're going, but I'll let you ask it of Angela so that she can direct you.
Good morning.
Good morning.
Can everybody hear me? It actually just related to the benefits. I wanted to be able to have other agents know the benefits of being able to be paid through as your own business versus personally.
Okay, can you repeat? There's a lot of interference at the moment. Can you repeat that?
Am I causing the interference? I don't think I'm causing the interference. Everybody okay?
Yep, now we are.
Okay. My question is basically, how can that benefit an agent more tax-wise to be paid as a business through a business, through an LLC, an S corp, whatever they've been best advised to become by their CPA, versus being paid directly to themselves, as in my case, Paula Miller.
Are you referring to being an independent contractor versus being an employee?
So, Angela, I think what she's asking is, although she's an independent contractor as an agent, she also has an entity. So she could claim the taxes as an independent agent or as an entity. And I think she's asking, is there benefits of that, or would there be an A, B better? You know, one would be better than the other.
Oh, okay. Well, in that respect, again, I would definitely have some type of protection being an LLC if you're a broker yourself. But you really could choose any of those options.
If I could continue to interject, and I won't take a lot of time here, but in my case, the way I'm set up as an S corp.
Okay.
My husband is a business as well, so I am paid through my S corp from Coldwell Banker, and I take a salary.
Yes.
It's something I've always wanted agents to pay better attention to. I draw a salary instead of my whole entire income.
Yes.
So I then am able to keep all my expenses inside the S corp, and it allows me to save more. It allows me to expend more for my business.
Yes.
And it also puts me on a path where my income is steady, always steady.
Yes.
Because I draw a salary.
Yes. If you set up an S corporation, you, as the officer, have to pay yourself payroll. And any earnings that flow through to you are not subject to self-employment tax, and that's a whole nother can of worms. But for that reason, as long as you pay yourself reasonable wages, if you have an S corporation, let's say you have $200,000 that flow to you through the S corporation, it will not be subject to the extra 15.2% of self-employment tax, which is Social Security and Medicare withholding. So in that respect, you may, yeah, that's not a bad option, but you have to pay yourself payroll.
Angela, there's another question here from Craig Alexander. It says, can I finish my in-home office in my basement and write off those expenses?
Yes, yes, you can. Just keep track of, the square footage of that space. And then if you're, just be careful when you look at it as, is that where I'm completing most of my work? If you're driving into the office every day, the IRS may look at that and say, eh. But if you really are working there, keep track of how much you're working in there and take the square footage, and then you allocate your utilities and your mortgage interest, if you pay rent, then that part of it, and then any improvements that you make. You can allocate that percentage and write that off against your income. That's if you're a sole proprietorship or a partnership. You can't do that if you're an S corporation.
Thank you. And then Janie.
Can I tag on to that question? I'm sorry, Steve. If you have a home office and say you've been claiming your deductions and you sell your home, is there a recapture on any of that?
There's a recapture if you depreciated the home. So you have to basically pay that back. Not everybody depreciates, even though technically you're supposed to, but not everybody. A lot of people will just take the percentage of expenses and not worry about depreciating.
Okay, and then Janie had a question about board fees and memberships. Are they deductible? And I believe that the answer is yes, but I'll.
Yes, yes.
Okay, and then Lauren asked for you to repeat the comment that you talked about the dependents. So I think she's talking about the children and the dependents. That's a pretty cool one, I agree. So that's a neat one for everybody to hear again.
Yes, okay. 1 second. Let's go back and so y'all can see the slide too.
It's much more visual this way. It's awesome.
Isn't it great? Okay, all right, here we go. So for certain business types, and actually really this is for partnerships and sole proprietorships, if you're an S Corp, you cannot do this, or a C Corp. But you can pay your dependent child up to about $12,000. And that's basically what, you can pay them up to the amount that they would have to file a tax return. So right now that is about $12,000. And they wouldn't have any withholdings and you don't have to pay payroll taxes. So in that sense, and you can still claim them as a dependent. So it used to be when we had exemptions on our tax return, you could pay them about $6,200. With this new tax law, it's jumped up a little bit. So that's why there's a difference now in how much you can pay them. And when I say dependent child, this has to be a child that's under the age of 18. So it can't be your college age kid, even though that's when they get really expensive. And it can't be your adult children either. So it has to be your under 18 dependent child.
Well, that sucks.
I
I
know.
have a lot of dependent child. So I have another question here. Don't know who it's from. It says, so if I have an LLC, should the 1099 that I get from CB be in the name of the individual or as the LLC? And I think the answer is going to be that it depends on how the checks are made out to you, but I'll let Angela default to that.
Yes, that is correct. That is correct. Now, if you have a tax ID number for your business, I would go ahead and make the checks written out to the name that you used when you applied for your tax ID number. So just as an FYI, it's just so that it doesn't get messed up in the IRS system. If it is written to, if these checks are written out to you personally, and then you go and file your S corporation tax return, that could be a problem. You'd have to show it on both returns.
Gotcha. So Lauren has a comment here, which I find interesting. She says, my child is 7. Wouldn't that look a little fishy, even though the child thinks that he's 17?
No, this is one of the benefits that they offer. So even if you're just putting the money away for them for later, that's okay. You can do that. And again, really $12,000. if you don't feel comfortable, pay them, I don't know, 6,000, pay them 4,000. Just put money away for them.
Great way to escape the taxes on that money, that's for sure.
Yep.
Okay, so Paula has a question here. It says, what about gifting tax-free to the recipient? What about gifting tax-free to the recipient, correct? But is there a benefit to the giver?
Gifting, you can do up to $15,000 a year currently. I mean, the benefit of the giver would be you're lessening your estate, of course, but the exemption is like what, $11 million. So right now, so if you're really trying to lower your estate, you can start gifting. So that's a benefit, but other than that, it's a way to help your family without them having to pay taxes on that money. I don't know. Do you have any other? Do I need to word that differently?
No, Paul, that was your question. Is that a good answer for you, or do you have other dynamics of that, Paula? No, Paula said that answered her question. So I don't see other questions at this point on there. So if anybody has anything, please get it in the chat box so Angela can help if there. I'm going to put a shameless plug in for Angela. I personally use her, and she's got the patience of Job because, as she tells me, I'm not the normal person, and mine may be a little bit more interesting for taxes than others. So, but she's been great for me. I have another question that came in here from Liz. Mileage when working from home doesn't start at your first stop or when you leave the house. So
Correct.
yeah, it's basically starts at the time you start working. I think, Liz, is kind of the technical thing. So I don't think it's from the time you commute to work.
Right.
Yeah.
Right.
And then Craig has a question. Does it matter if you have a home office?
Nope. Doesn't matter. Doesn't matter. I would just be careful how much of that you claim. You don't want the county coming in and looking at you funny. You know, I would say a lot of people that I see that do it, it's like, 8%, maybe 7%. It's not much. If you have a 10 by 12 room, it's really not that much of your expenses, but it is helpful.
Gotcha. And then I have one more question on mileage, and I'll jump up to another one. So the question on mileage is driving from one of our Coldwell Banker offices to another, would that mileage count or would it not?
It would count.
Yeah.
Absolutely.
And one more on mileage. I'm sorry, mileage seems to be the hot subject here, Angela.
Woohoo.
On mileage, if I'm traveling from a home office, wouldn't the mileage start at the house? And that was from Susan Reichel.
Oh, wouldn't that be nice? No. For some odd reason, they don't. I know that makes way too much sense, but they don't. The IRS does not like that. So.
Okay. And then one more question here before they, Susan didn't like that answer for some reason.
I know. I'm sorry, Susan.
So there's a question here, best way to pay an assistant for tax purposes. So I'm thinking they're talking about an agent that's using an assistant.
Yes.
And I'm assuming they're asking, should they pay them as a 1099 or as an employee? And I'll let you take
Okay.
that, Angela.
Sure. If you're controlling your assistant's schedule at all, they're really an employee, and that's how the IRS would look at it. But if you're just throwing work at them and saying, hey, I need this sometime soon, then go ahead and pay them as an independent contractor. But most likely it's going to be a payroll situation.
So we have a lot of mileage things here, which kind of surprises me on this one. So I think I have a person that is being paid salary from the office. And I don't know how we're structuring this, but if that would be the case, it says, what if you are a salary and have to travel to multiple offices? Is that deductible? I think is what they're asking.
What if your salary and you have to, okay, if you're an employee under the TCJA, the new tax, you can no longer write off mileage or any type of unreimbursed employee business expenses.
Gotcha.
It stinks, but you can't do it.
Okay, another mileage one. So if I stop at the office first and then go to an appointment,
Yep.
for mileage if the office is on the way. So how would they do that? So
They would, yeah, I would stop at the office, even if you're just stopping at the office, and start your mileage there. And then when you go to your first location, that's deductible. And then your next location, that's deductible, and so on. So even if you're stopping for lunch in between, that's all deductible.
okay, and then how much can you pay someone before you have to pay taxes on them? I think it's just under 12 grand, but that's a Angela question.
Correct. Yep, that's correct.
These guys are having fun with you, Angela. Some of this stuff I'm not going to give you a hard time about. They're upset that you haven't manipulated the IRS to do a better job for them.
Oh, I will definitely push it to the limit. But yeah.
So on a lot of these questions, obviously a lot of this stuff is personal to how they're doing their business and maybe how they're running. That's what I was just going to ask you. Is there a way they can get a hold of you and ask questions, or if they want to do a consult with you, can they?
Absolutely.
Is that something that they have to come meet with you, or can you do that virtually, or how are you doing those?
We can do it virtually. I can come to you. We can meet in the middle, whichever. I'm open to anything. I have other clients in Winchester as well, so it really does not matter if I come out your way, if you're comfortable with everything going on. Otherwise, we can just meet virtually.
Excellent. Any other questions out there? I'll post some stuff to Stephen or Sheila or Michael. Do you guys have anything?
Angela, if you could email your slide, that would be great. I see it has all your information on it. for
Yes,
the agents.
I'll email the whole slide package, and I'm sorry about that, guys.
That's all right.
Those were kind of fun. Yeah.
Couple other questions. So it says, they have a quick question, the COVID stimulus information. And Susan, I'm going to let you unmute and ask the question because I want to make sure you're getting it clearly to her.
Okay. Hi. How are you doing, Jill?
Hi.
Angela?
Hi.
Um,
Hey, Susan.
Thank you for your time. I appreciate it. I know that there are some other businesses in our area that have, of course, been impacted negatively by COVID, restaurants and that kind of thing. And there
Yep.
are lots of options for them in getting some relief and that kind of stuff. And so even though our business is super booming right now,
Mhm.
are there tax things that we can do to sort of insulate ourselves going forward that are available to us, say if the bottom drops out of the market, whatever. So it's a super general question. I am currently inept when it comes to taxes. So, and I'm working to learn a little bit more. So I'm just wondering if there are things that we can do to safeguard ourselves.
Sure, absolutely. I mean, there are, aside from, since times are good right now, make sure you're setting aside a percentage of your money, just, in case something happens again. Congress is still trying to decide if they want to offer a second round of these PPP loans, which, who knows if that one will be forgivable or not. But there's other things. There's the SBA offers disaster loans, and they're still offering that if you wanted to, apply. But I would really just, try to, since times are, we don't know what's coming and what's going to happen, I would definitely try to save as much as your money as possible.
For sure. I just didn't know if there was anyway, I can ask you.
There also might be
separately.
another stimulus coming, but who knows? They're having trouble deciding, I guess. So,
Okay, thank you.
sure.
So I'll make one more statement in here from a generalist from the company standpoint. Guys, remember, we have several of our agents, when they get a commission check, they are moving this money at the time of the commission to a savings account, either for taxes or for a rainy day fund. So for example, 90% of your commission you take to your normal banking account, and 10% of your commission we send to a repository account for you to keep for, the rainy day or taxes at the end of the year or whatever. So you do have that ability as long as we know in accounting how to do that. And I have several agents that do that. So, just so you know. So frankly, it's kind of one of those, if you don't see it, you might not miss it. So you have that ability with us at the company. All right, Couple more questions, Angela. I'm sorry to keep on,
No, it's good.
keep on the thing here. So they're asking, do you service West Virginia?
Yes.
Yes, she does. Okay. And then she wants to know if you can share the slides with us.
Yes. They're headed your way soon.
Okay, back to the dependent. How do I pay my dependent? Is writing a check and putting in his account acceptable at the tax time, or just include the documentations for the CPA person?
You can pay them throughout the year if you want, and just put it in their bank account. I have some clients that write a check once a year. If you happen to have that amount of money, and just put it, have them put it in their bank account, or you can put it in their bank account. So that's fine, as long as it doesn't go over the limit. If you go over the limit, then they're going to have to file a tax return.
Yeah, and that could be problematic.
Right.
Good. All right. One more time around here, Angela. I'll cut them off after this one. Stephen, Sheila, Michael, anybody else that hasn't spoke up? Have any questions?
I do not have any questions. I just want to say thank you very much, Angela, for your time. This was great information.
You're welcome. You're welcome.
Sheila, thanks for letting me take over and help do a little bit of this. I know that's normally not my role in this, but you guys have done a great job. I knew you were having some problems, so I appreciate you letting me jump in on that. One more question. If your dependent turns 18 by December 31st, will he still qualify as a dependent for pay that year?
Unfortunately, no. Yeah, it's the year you turn 18, you lose that benefit. So just like if you get married on December 31st, the IRS thinks you've been married all year long. So,
So we're getting some comments from the group that this says, if worst case, just adopt somebody.
there you go. Yep. Can you?
I mean, they're creative. I'll give them that.
Yep.
All right. Well, thank you, Angela, for taking your time
You're welcome.
very much.
You're welcome. All right.
And Angela, if you
Yes.
could do me a favor, please, if you could make me host again, so that way I can stop the recording.
Absolutely.
All right. Thank you, everyone.
Thank you, Steve.
Where do I do that?
Hover over your name, over under the participants, when you hit participants, and then you'll go where your name is and you'll hover and it'll say more. So you have to hit participants first
Okay.
and then hover over your name and it'll say more and just click make host. Oh, actually hover over my name. I'm sorry, hover over my,
Okay. Got it.
yeah, and then make me the host.
Okay. I'm looking for you.
And it says CB Premier. me.
Okay. Thanks.
You were probably looking for my name.
Yep. Sure was.
I should have renamed myself there.
Okay. And so I'm going to send you these. I'm going to print these slides to PDF and send them to you. And then you can email them. Does that